Hello, and welcome to the presentation on the CARES Act and how it affects individuals. I'm your presenter, Ray Langley, and this video is sponsored by Berkey Cox Evans and Bradford Accountancy Corporation. Here's our official legal disclaimer. So, the CARES Act is the Coronavirus Aid, Relief, and Economic Securities Act. It was signed into law a little late on March 19, 2020, and it was signed into law as a response to the reduction in economic activity experienced worldwide. The PDF is very thick at 247 pages long. One of the biggest things that the CARES Act did was create a stimulus check that was sent to eligible taxpayers. This stimulus check gave $1,200 to single filers and $2,400 for those who were married. There was an additional $500 sent to taxpayers for each qualifying dependent under the age of 17, so that amount could add up quite dramatically. Now, if you either got a reduced stimulus check or didn't get one at all, it's probably because your AGI was above the threshold. The AGI the payments are gradually phased out at a rate of 5% of the individual's adjusted gross income over $75,000 if they were single or married filing separately, $122,500 for those who filed as head of household, and $150,000 for the joint taxpayers. So, the creation of this stimulus check builds the grounds for this question: what if an individual that qualified for a stimulus check did not get one? An individual who was not eligible for 2019 for the $1,200 credit will be able to claim the credit when they're filing their 2020 tax return. An example would be someone who was claimed as a dependent in 2019 but was not claimed as a dependent in 2020. So this is really important because it means that when we file a tax return, we will be able to get households with college students more money than we would have in prior years. So it's definitely a great year to choose to use a paid preparer if you're someone who typically self-prepares, because even if you always get the standard deduction, there is still advantages to having a paid preparer this year, as there are so many things above and beyond that have never been available to us in our accountant toolbox. If an individual got a stimulus check and was not eligible for one in 2020, they do not have to pay it back. Another cool thing that the CARES Act did was allow for the 10% additional tax to not apply to any coronavirus-related distribution of up to $100,000. The distribution must be made between January 1st, 2020 and December 31st, 2020, and that payment must have been made to a qualifying individual. A qualifying individual is a person who is diagnosed with coronavirus, whose spouse or dependent was diagnosed with the virus, or someone who experienced adverse financial consequences as a result of being quarantined, furloughed, laid off, had hours reduced due to the virus, or are unable to work due to childcare. Any distributions made can be contributed back to the retirement plan, and required minimum distributions are waived for 2020. Another great tool that's been added to the accountant's toolbox is a $300 above the line deduction for single taxpayers and $600 above the line deduction for those who are married filing jointly. This means that if you typically take the standard deduction instead of the itemized deduction, we can still take your charitable contributions up to that $300 for single taxpayers and $600 for those who are married filing jointly. Now, that amount may seem like, hey, that's a lot, I don't normally donate that much, but if you donate $25 to church every month, that will equal that $300. So it does add up very quickly, and it's definitely something that I'm going to be asking taxpayers when we start filing taxes for 2020. This is great for those that normally take the standard deduction. For those that take the itemized deduction, all charitable contributions will be reported on the Schedule A, and you cannot get that above the line deduction. Although itemizing creates a much better benefit than just that $600 above the line deduction would anyway. The CARES Act also raised the bar for the deductible amount of donations for those itemizing. It's up to from 60% to 100% of your adjusted gross income. So hypothetically, you could donate your entire year's income and walk away with no taxes owed. However, it's very hard to pinpoint what your adjusted gross income is going to be until it's time to do your taxes. So it's probable that you'll either donate less than what your adjusted gross income was or a little more than, if you're up to that point. Another very cool bonus that the CARES Act enacted is that it broadened the qualified medical expenses for health savings accounts. Now they can be used for non-prescription medications and even medical supplies. The distributions can also be used for feminine hygiene products, so a major win there. Bit of a learning tool just to show how the stimulus checks were calculated that were sent out. Craig and Blocka are eligible individuals who filed for 2019. Their adjusted gross income is below that $150,000 threshold at $120,000. They have 3 qualifying children, all of them under age 17. So how much do they expect to receive for their advanced rebate? So that answer is D. This has been the presentation on the CARES Act and how it affects individuals. I'm your presenter, Ray Langley. The company that sponsored this video is Berkey Cox Evans Bradford & Accountancy Corporation. And if you're a video editor, please reach out to me because I definitely need some assistance in figuring out how to utilize these tools. Thank you so much and have a wonderful day. Bye-bye.